Welcome to In Three Nerds We Trust, where we have Tina Jan and Jennifer Higgins. And today we have our third nerd is Joe Amlani, who's going to talk to us about insurance.
Hi, Joe. Tell
Hello,
me
how are you?
about yourself. What is your company?
So my name is Joe, and I'm the owner of Amlani Insurance Agency. We're a brokerage in Redlands, California. And before the insurance marketplace got all imploded on itself, we would quote with many carriers and provide quotes to any customer fairly quickly, encompassing fire and home insurance. And we're going to kind of dive more into that, I know, in a minute. But I have three team members right now. We're on State Street in Redlands. We are licensed in a total of 7 states, of course, California being one of them. Started in insurance back in 2017, was a captive agent, meaning we only sold for one insurance carrier in those days, and then decided to go independent. And now, fast forward to 2025, that's what we were doing.
So,
Wow.
explain that for people who don't understand being captive agent or being a broker and able to broker out to different.
Yeah, so a captive agent means they sell one product for one specific carrier. State Farm being the biggest captive agent in the entire country. State Farm agents sell for State Farm and State Farm only. An independent will go out and shop many different carriers. In an ideal marketplace, we would have a lot of carriers. Right now, that we are limited because a lot of carriers are constricting and not taking on new business. I know some of the questions are going to come today are going to be on that along that line. So we'll dive into that at that point. But we basically shop for the best rate for with multiple carriers.
Is it okay if I ask some home insurance questions?
Please, yeah, please.
We used to be better about bouncing that around. We'll have to work on that.
Yeah, right. Um, so I guess the biggest thing that just in general we've been hearing, a lot of my customers are saying, "Oh my gosh, our insurance premiums have gone up so much," or this insurance like dropped me, or what is going on right now? It's just like, what is going on?
I'll give you a brief synopsis of kind of what started this downward trend into what we have now, and it's kind of just a mess across the board. 2020 happened, COVID. We had a obviously worldwide pandemic. There was a lot of issues in general. At that moment in time, the Department of Insurance for the state of California put a pause on insurance carriers taking rate increases. So every carrier that works in the state of California, State Farm, Farmers, AAA, Safeco, Travelers, all of the above, the only way they can increase rates is via an application to the Department of Insurance saying, hey, we're Travelers. We would like to take a rate increase of X% for 2020 or 2021 or whatever the case may be. At that moment in time, they paused all rate increases. So they can't just take a rate increase whenever they feel like it. So it's a very unique situation. We're the only state in the country that has a Department of Insurance set up that way. So the carriers must ask permission and get approval before they can raise rates. Whereas you have any other business in general in California, whether it's a restaurant or anything, you take a price increase, you don't need to ask permission. You just do it when it's necessary for the needs of the business.
Right.
So COVID happened, paused all rates. Then we go into 2021 and 2022, and inflation goes through the roof. We saw it with you guys saw in the real estate business with prices of homes going crazy. And during that time, there was still no rate increases. So they were rate inadequate, meaning they were not collecting enough money to pay out claims in the event of a major catastrophe because the cost for wood and lumber and all the things that go into building homes went through the roof, including labor. So fast now we're into 2023. They're starting to get some rates through, and they're starting to get through, and then we kind of were doing okay. We had the line fire in Highland. No real structures were really damaged at that point, but there's always fires up in Northern California. And then end of 2024, some carriers were coming back and saying, "Hey, we want to start writing business again in 2025." And then beginning of 2025, we know what happened in Pasadena and all that whole area went to really, really bad. We had a couple dozen customers affected by that fire. It was horrific to see it in person. It looks like a war zone, truthfully. So from the last 5 years, the carriers were not getting the rate they need. Just like everything went up, right? The gas went up, everything went up, but the rates were kind of flat. And during the meantime, to replace the house that before was, let's say, 200, 250 a foot to rebuild, is now 300, 350 a foot to rebuild. And the carriers were having to eat that cost, and they couldn't charge more because it's not how we're set up in the state to do. They must apply.
Hmm.
And that's due to Prop 103. So Prop 103 governs how they do business in the state. So that's why you saw State Farm and a bunch of other carriers shut down and stop issuing new business because they were unprofitable. So there's no purpose in issuing a piece of business where they're losing. If they collect $1, they're losing $1.30. They don't want to
Right.
keep losing money. So they're trying to get an idea of what needs to happen for rate to catch up. And that's why we're seeing major increases right now. And at least we had a person call in the other day, and they have a brand new building in Beaumont, a year old, and it went from 1,200 to 29,000.
What?
That's the highest increase I've ever seen. From 1,200 to 29,000 was kind of insane to hear it.
Oh my gosh.
So we're able to help them, and we got them situated for like 16, 1,700. But you know, 29,000 was not in my realm. It's a brand new house essentially. They barely moved in last year. They're the first owner of 1 year. The renewal came out. Boom, you got sticker shock where it's like, what the heck is this? Um, and so sadly, what I tell them is that's a nice way for them saying they don't want your business.
That's exactly what I was thinking. That it has to be kind of we're going to make this so cost prohibitive that people are not going to renew, instead of us saying we don't want to non-renew you.
Correct.
Huh.
And that's where the challenge is coming into play. I got non-renewed for my personal house. I live in Beaumont. And I had to go find another carrier. So just like many, many other people do, majority of our calls are people getting non-renewed.
So I can understand if you live next to a fire prone area, but this was a brand new house, and a lot of those brand new homes have, like, I don't know, fire deterrent kind of things, like water systems inside the roofs and things like that. So it's crazy to me that even just regular homes are getting affected by this.
So the second part to why the home insurance carriers are limiting, and they stopped issuing new business and they're issuing non-renewals, is the second part of Prop 103 has to deal with the FAIR plan. A lot of people have been going to the FAIR plan, which is a fire, wind, and hail policy. And I'll distinguish between the two in a minute. So the FAIR plan is somewhat government run, but not really. Okay. So the FAIR plan will collect premiums. Jen pays X number amount to FAIR plan. If you have FAIR plan, Tina, you do, I do. Let's say all of us have the FAIR plan. The money we're paying annually goes into their bucket, right? If what happens in Palisades affects a lot of FAIR plan customers, which it did, and the FAIR plan has money set aside to pay claims and they run out, there's essentially a three-pronged way they pay claims. The money that we pay, premiums, that goes into paying claims. Number two, they can go after the carriers and say, hey, State Farm, hey, farmers, hey, travelers, hey, whatever, your percent of business you write in the state is 14%. We're short $100 million. You got to give us $14 million. And they by law have to do that. The challenge with that is travelers didn't collect any money for that. So now they're having to go into the savings essentially and say, hey, we got to give $14 million to the FAIR plan. The third option of that, because they can only recoup up to $2 billion that way. If that's more than they have, again, then they go to the taxpayers, all of us. We're going to be assessed that right. And that's State Farm went out early because they have the biggest market share. They had
Right.
18% market share. So if it wasn't the billions of dollars they were short, that could mean hundreds of millions of dollars they would have to pay, and they collected no money for that.
Right.
And that's the challenge it's been. That's why a lot of carriers have just started non-renewing. That's what happened in the people in Beaumont. They're, lack of a better term, getting non-renewed, even though the premium went up to 29,000. But a lot of people in that area are getting non-renewed because that carrier is like, hey, we don't want to participate in funding the FAIR plan, so we're going to non-renew the entire book of business. They may come back down the road I'm going to say probably not. A lot of carriers are not coming back because of the challenge of dealing with that, and there's some other challenges with the Fair Plan and Prop 103. They're trying to work through between the carriers and the Department of Insurance.
So
So I had, sorry, go ahead.
if people have a choice between a plan that is non-fair plan and a plan that is would you say, like, for your recommendations, would it be a cost factor, like if it's only a couple hundred more and it's something that the buyer could or the owner could do, it's still worthwhile? Or what were you in general saying to clients?
So sure. So let's say, for example, um, you guys had travelers. That's a regular home insurance policy. A home insurance policy by nature is called a fire policy. So a fire policy just means a property policy. Okay. So right now we're seeing a lot of people asking for, do I have fire coverage? A regular homeowners, before it all got goofy, automatically covered fire. Wildfire, kitchen fire, electrical fire, any kind of fire, unless it was done, of course, maliciously and they did it on their own property. But it covered fire. So right now, with the limited availability of carriers, we're going two routes. We're going to a non-admitted carrier, which means they're not governed and monitored by the state of California. That's option A. Or we're going to the fair plan in a difference in condition policy. So they have to essentially have two policies.
Right.
So your normal homeowners is going to cover fire, wind, hail. We don't have tornado, but it would cover that under the wind. Like Texas will have that, and Florida and those kinds of things. Um, Liability, theft, if I didn't say theft already, and coverage for water losses, like a pipe burst, for example. You
Mm.
leave for the day to go to work, the refrigerator behind the refrigerator pops off and there's water everywhere. The damage that does is typically covered on most standard homeowners policies. So now we're separating the fire, the wind, and the hail to the fair plan. And then the other things are covered by the DIC. So they kind of mold together like a standard policy would. The challenge is it costs more now. And we're all feeling that. Mine went from $1,400-$1,500 last year to $3,100, and we're seeing that happen frequently across the board. And it sounds like it's the carriers are just going out of control, but they're really trying to catch up from 2020.
Right.
It's not just been overnight. Now they're starting to get rates approved, and they're trying to play catch up. And it's coming to all of us as a pretty steep increase across the board.
So, I had gone to another insurance kind of talk before for the board, and one of the ladies had mentioned that it was pretty common for premiums to double, if not triple. Is that kind of price wise what we were
It
seeing?
it it, it depends. On average, right now we're seeing conservatively 30 to 40% increase year over
Mm.
year right now. Um, sure, are the ones that are double, triple? Yes. And then the one I mentioned earlier, 1,100, whatever it was, to 29,000. I've never seen that big of an increase ever. I mean, and that's insane. But we're seeing on average 30 to 40%. If they're having to go from like that one, a regular policy to the fair plan in the DIC, then it could be double. That's where we could have some issues. If there's a regular carrier and they're having to go to a fair plan, then that's where the double or triple could come into play for sure.
Mm.
Mhm. Um, I was I was learning about lithium battery fires in houses too. Like with my rentals, I have to give a notice right now for lithium batteries, and it's like 2 pages or 3 pages about because people are allowed to have e-mobility devices in their homes now, in the rentals. So now we have to give this lithium ion battery thing notice. So are there a lot of lithium ion battery fires?
It's more and more frequent. Yeah, we had one when I was with the captive agent before, with the agency when I owned it before, in Redlands, by Crafton. They had one of the, I forgot what they're called, where the two-wheel thing when they stand on it, whatever, that hoverboard, I guess. They
Mm.
had it plugged in the garage and it caught on fire.
Huh.
Mm.
Just plugged in, charging, nothing out of the ordinary. They charged it. many, many times. They owned it for a couple of years. Nothing different. It just got too hot and it caught on fire. Burned a large part of the garage, and it was, a couple $100,000 in damage because of smoke and all kinds of stuff. But yeah, they do happen. It's not super common, but it does happen.
Maybe as all of our tech is transitioning over to the lithium ion batteries, that'll be a more common thing. Like my
Yeah.
Right.
laptop from before, I got, what do they call it? A spicy pillow, where my
Hmm.
laptop battery basically just got huge. And I'm
Oh,
like, oh
gotcha.
my gosh, I need to change this out. So yeah, I guess that almost happened.
A spicy pillow? Is
They
that what you
call it a
called it?
spicy pillow.
I've never heard that term.
I have never
Yes.
heard that either. But again, I guess Joe, we haven't had the spicy pillow yet. So I guess
No,
when we get it,
hopefully,
then
hopefully I don't. It sounds not good.
along that same vein, I know that with solar, a lot of times if it's solar and it has the backup battery, or there's an issue that I heard happens with the fire department and solar being on properties, especially if they have the batteries. Have you come across that at all?
No, I haven't heard anything. I mean, obviously, backup batteries and solar is super common. Now, I haven't had any issues with fire departments having any issues with, addressing that if there is a fire. They definitely want to get access to the garage wherever the batteries are stored to make sure that they don't combust during a fire
Right.
because they could be explosive. But I have not heard any issues. And like I said, we had some customers in the Eaton Palisades fire, and a couple of them did have batteries, but it was a total loss. So the house was gone. There was no saving it. It was wiped out.
What do you see as the progression of what we're going through in California for homeowners insurance?
What I see as a progression, a couple of things need to happen. We need to, as the carriers and the Department of Insurance, they need to come together and they need to find a solution. Right now, what they're trying to do is they're trying to have Prop 103 be changed so that the carriers can take the rate they need it quicker because the Department of Insurance, even before 2020, they were taking about 8, 9 months to approve rates.
Mm,
I mean, it can't take that long. Um,
right.
Number two, the carriers can use wildfire modeling scores to predict future what could happen as opposed to what happened in the past. That's number two. Number three, they can surcharge or charge the customers for reinsurance. So most carriers use reinsurance. What that means is that if their claims go above a certain amount on a catastrophic loss, billion, 2 billion, whatever it is, there's another insurance company that picks up the difference, essentially. So they're on the books for only a couple of billion in losses, and then another carrier picks up the rest, if that makes sense. So they're trying to be, if they have to tap into now with the rebuild costs going out of control and rebuild everyone's houses is significantly higher than it used to be, they're going into reinsurance much, much quicker and it's expensive.
Right.
So, but at the same time, not to blame it all on the Department of Insurance, the carriers are being big babies right now too. Everyone needs to grow up and come to the table and say, hey, the average person, homeowner, renter, condo owner, manufactured homeowner, we're the ones suffering on a monthly basis because a couple of years ago, I was thinking that was going to be the next big issue in real estate was going to be insurance because it's not only the insurance has gone up, the gas has gone up, the food's gone up, everything's gone up, so that it makes it tough. And the average person's wages haven't gone up, so it makes it hard for the average family to go from 100 to $300 a month in insurance. And that's a lot.
I mean, I
So,
wouldn't say it hasn't affected it. What have you seen, Tina?
oh, sorry. I was just going to ask a question before. So we think of it as a California problem, but it's really not a California problem. It's a national problem, right? Because this the pricing going up on groceries and everything is affecting everyone. So it's not just California, is it?
No, it's not. But before 2020, we were like number 15-ish as far as overall home insurance price in the state. But we've been dealing with the fires for many, many years and the things we deal with here. Colorado. So the top are Florida by a lot.
Sinkholes. No, I'm just kidding. I don't know.
No, the weather,
Crocodiles.
yeah,
Hurricanes,
the hurricanes.
alligators.
Uh, New Orleans for sure. Texas deals with a lot of stuff because they have the super cold where it's hailing and the hail is this big, so it's denting cars and roofs and all kinds of stuff. Colorado is getting the same way. We're approaching now top 8 or 9, so we've gone up a lot of notches as far as overall cost. But if you get into the Midwest, Texas for a regular house is $4,000 all day long for sure. We're licensed.
Mm.
We're licensed there. It's very expensive. And most cases, since Texas is so flat, you need a separate flood policy. We don't deal with a
Hmm.
lot of flood insurance in California here because we're hilly. But obviously, what doesn't mean anything because obviously what happened in Oak Glen, there was floods a couple of weeks ago.
Mm-hmm.
But in Texas, it's very common because they get a lot of rain at one time. There's nowhere for it to go, so it just sits there, and there's floods. So flooding homeowners in Texas could be 5-6 grand for just a standard. My brother lives in Plano, and it could be easily 4 to 5 thousand, no problem.
Are there any cheap states? Cheap insurance states?
Well, I guess cheap is a relative word. I mean, Midwest
Right.
isn't horrible, but still, when you go through that area where there's a lot of tornadoes, you start dealing with that. In the Midwest, because they deal with tornadoes and stuff in that area, so it can be somewhat expensive. So Arizona is still affordable, but a lot of people have moved down there, and that's driven the cost of real estate up, and that's in turn increased everything else. So Arizona was
Right.
pretty good. Nevada is still pretty approachable as far as homeowners insurance. We're licensed there as well. Utah is not horrible. At least down there was options, right? It's not just like, hey, we have one. That's
Congratulations, we got you covered. This is
yeah,
the one you can choose.
you're
Yeah.
covered. You have this. That's it. There's only option. So I don't like that. That's why I left the captive side because I wanted to be able to offer options,
Right.
and then the consumer can make their own decision. Right now, in a lot of cases, we have one. So just to touch base on when State Farm left, the reason it made it harder for everybody else is because they were writing 1 out of every 5 homes, right? 18-19% range. So when they stopped writing business, all that business that would have been issued is now into the marketplace.
Right.
And the other carriers didn't have capacity. So now people are saying, I'm not in a fire area. Why am I have to go with the fair plan? They associate fair plan as like I'm way out in the middle of
Just
nowhere,
fire.
and I'm in
Right.
I'm in I'm in a bad fire area, and that's not true in a lot of cases. It's because there's not the AAA or whoever the carrier is in that specific area has too much concentration, and they're not able to write any new business. So we're left with the fair plan, or we're left with something else because not because it's in a fire area, is because there's no carriers writing in that zip code or that area. The banning bench going west into Ukaipa and Mentone has made it very difficult because you know it the availability of carriers has been really tough, and then
Mm.
obviously we're all in this area. Banning and Beaumont is continuing to expand. They're building thousands and thousands of homes, and there's just no availability of carriers. So it's tough. It's very challenging right now.
I
So
tell
Calamasa, same thing. Go ahead. I'm sorry.
I tell no, I tell my clients pretty much anytime there's a hillside, because over in Hemet, by Park Hill, I've had issues.
Yep.
I'm showing homes up in wine country in Temecula, and I know that they have issues up there just because there's so much wide open space. So
Agreed.
it really does seem to be kind of going across all of California, especially all our areas that we cover. I
Exactly.
came across something recently. What was it called? Non-admitted or surplus line insurers.
Mhm.
What are those?
So a non-admitted or surplus line, we call it excess and surplus, all of the above. What that means is that they're not governed by CIGA. So you guys have CEA, insurance carriers have CIGA, California Insurance Guarantee Association. What that means is that every carrier that wants to do business in here on an admitted basis, we already mentioned Travelers and some of the other ones, they have to open their books and show their financial strength and essentially prove, and they're backed by, at that point they get a stamp of approval from the California government, and they're essentially backed by them saying, hey,
Mhm.
we give them our full approval. When it's a not admitted or excess and surplus, they don't have to follow any of that. Majority of them are still AM Best rated. The lenders will still accept them because we use them frequently because they're still somewhat cost effective. Increase whenever they feel like it. When you lock in that annual term, they're not going to do it during that term, but they can, the next renewal, they can increase prices and as they see fit. They don't have to ask, and it takes 9 months to just boom, it's ready to go. Number two,
Interesting.
if And if, God forbid, there is a massive catastrophic loss and that specific carrier that's not admitted or excess and surplus runs out of money, you get nothing. So when we're selling that type of product, we're very upfront with the customer. Like, make sure you understand what this means. Do you have questions? Please review it. They're going to be signing what's called the D1, and that's going to show them exactly what that means. And again, the lenders are accepting it, and some of them they're fine with it. But it's super important that the person buying it understands what they are getting.
Makes sense.
But at least they're available and they're willing to write business and it's somewhat affordable. And if we can weather this storm into carriers coming back in, then the goal is to remove all of them from them and put it back with the admitted carrier. I don't anticipate that happening for a good amount of time. I would say if Mother Nature is nice to us this winter, as we proceed into October, November, December, where that's when the apple fire happened at the same time. If we can get through the windy part, where that's what really drives the fire is the wind. So if we can't manage the wind and have it pretty somewhat decent, then it could be bad. So if we can get through this part and have some rain come winter. At minimum, I'm still saying 2028.
Years. Okay. Something to look forward to, maybe.
Yes.
Always positive.
So, yeah,
I mean, these years go quickly.
Yeah, they do.
They do. So what consumers can do to try to mitigate the risk and try to improve for the carriers, because right now carriers are inspecting way more than they ever did. When we issued a policy pre-2020, I could issue 100 and none of them ever inspected the property, not even one. And maybe that's bad on them. That was bad on them. And now when we issue a brand new piece of business or at renewal, they're inspecting every single one, whether it's a drone, whether it's a person, whether it's inside, whether it's outside or both, they're inspecting the property. And they're finding a lot of things that were deferred maintenance. You guys are out there seeing properties and you see like, okay, well, this fence is on its literally last limb. It needs to be replaced. And when you have that, insurance was initially made for catastrophic loss, not for a 30-year-old fence blows over and you file a claim. You can, it's your right, but there's still maintenance that need to be done as a homeowner. No different than a bald tire in a car. You don't call your insurance for that. You go get another tire. You have a pipe burst, a fire. These are all sudden and immediate things. Fire, pipe burst, someone crashes into the house with their car, God forbid. It's happened. Tree falls on the roof. These are all sudden and immediate things. The fence that's old is not sudden or immediate.
Right.
It's been going on for a period of time. Whether you choose to look at it or not is a different story. So as carriers are going out there inspecting the sidewalks, is there a debris around the house? Is there trees overhanging the roof? Are the eaves painted? Is there a general sense of pride of ownership of the property? You guys have seen a lot of houses, the ones that are maybe a little bit older, but there's still pride of ownership.
Right.
It has nothing to do with age. It's more of like, hey, this person taking care of the property over the time. Because we have properties in Redlands that are 100+ years old and they're beautiful.
Right.
But some of them look really bad and they need a little facelift. But some of them are beautiful because they've been maintained really well.
So basically, things that homeowners can do to help with their maybe look better to their insurance companies is just really solid maintenance, solid property maintenance.
Solid maintenance, make sure there's no debris. Like if you have 3 or 4 cars parked in the front yard on the grass and they don't work, it's not going to be good. If the concrete's lifting and there's a big step in the driveway, it's a tripping hazard, they're on the hook for the liability. So you may be paying them $2,000 a year, but if you have liability of $300,000, they're still on the hook for $300,000 potentially in the liability if someone tripped and fell and tried to sue you.
What about a defensible space?
Defensible space is coming more into the mix, not necessarily from the insurance carrier as much, but for CAL FIRE and those kinds of things with the different zones, and they're gonna keep coming into play. But we are starting to see some carriers that 5 feet around the house, There's a couple carriers calling out the wooden fence if it's touching the house. They want to see it vinyl or metal. So there are a few that are calling that out. Not everybody yet, but I do anticipate in the next 12 months there will be more and more pointing those things out. And it's really just because majority of the time the wooden fences are not maintained and they're old and they're not sealed and they're just dry rot, and they've been weathered. And that's fine, but the main thing is, yeah, general maintenance. Any debris in the backyard. Dogs are a big deal, depending on the breed. Trampolines, same thing. Pools are fine. Once you start getting into diving boards and slides, those are another thing. Reason being is most pools with slide and diving boards were installed in the 80s and
Right.
before, and they were not maintained. So they break and people get hurt, and that's where the liability comes into play once again.
So I advise my clients, as almost everybody now. I don't look to make sure it's on the NHD that it's a high fire hazard safety. I have them talk to their homeowners insurance right away because they need to know what their total cost is, and I think that it's becoming a lot bigger portion of their monthly payment to do their homeowners insurance.
Agreed.
Would you say before even writing an offer? Or would you say especially at time of offer, whatever's soonest?
Yeah, what I'm recommending to anybody who we work with or whoever you work with as an agent, reach out to them immediately and say, hey, we're looking at 1234 Main Street. How are we looking? Is there carriers available? What kind of ballpark are we looking in that area monthly? Most lenders have bumped up their monthly projection as far as what insurance would be. So that part is kind of solved, but even still, it's not exact. So reach out to that agent and say, hey, what are we looking like? Jan Smith or whoever it is looking at this property, and just get a pretty basic ballpark. The reason I'm saying a ballpark is because if we have to go to the California Fair Plan, the quote is only good for 30 days and it must be issued in that 30 days. If it is not, we must resubmit for a brand new quote.
Gotcha.
So that quote could change. But most of the time we all do business in this area a lot. So you should be able to get a pretty reasonable ballpark for what that house is. Like when she told me 29,000, I was like, we can definitely get you something better than that for sure.
I would hope so.
It was not even close. I was like, all right, this is for sure. But reach out to whoever your trusted advisor is and reach out early and definitely make sure. The only caveat to that and the asterisk I'll put on the end of that is as we proceed into the windy part where fires can flare up, the only quote that's good is the one that's issued.
Right.
Because if we have a fire, majority of the carriers will put what's called in a moratorium, which means they will not issue any new business.
Right.
Even the fair plan. So even when Pasadena happened, even way out here, there were certain carriers we couldn't issue business even out here because they were trying to get an idea how bad it was. There was initially saying 25, 50 billion. I was like, that's way too low. That's not even a drop in the bucket. It's going to be significantly higher than that when it's all said and done. It's going to be hundreds of billions of dollars in damage in that area because it's wiped out. So reach out, make sure they have it. There's a fire that breaks out. Hey, are we good? There's got to be more communication from the buyer to everybody now. Historically, you guys were the center of the transaction majority of the time, but the buyer's got to kind of take a co-captaincy with you guys and kind of take charge as well. That's going to be the other part of it. They have to kind of hop in the middle there.
Right. You need a proactive partner.
100%. You guys have always been the center. Majority of the time when we were communicating with you guys, you're communicating the lender, escrow, everybody else. But now the buyer really has got to take some ownership and say, hey, I've already reached out to Joe or whoever, and we've already got this, and this, because you don't want to get to the end and then it's like, oh, this is $500 a month. And then now the transaction is no bueno.
I think the CAR form, the new one for the purchase agreement, also has something in there for insurance now, which it didn't have before, as a type of contingency that the buyer, could look for and make sure it was within, whatever it was, some
Correct.
amount that they can afford.
Yes. When did that form go on there, Jen? Do you know? Is that this year?
I want to say beginning of this year, if not tail end of last year.
Yeah.
So it's newish.
Yeah,
newish. For agents like Tina who actually read their contracts, she knows. Unfortunately, sometimes when they do changes like that and they just put it into the document, sometimes people miss that.
Oh, got it. Okay. But yeah, it's in there now. People have been telling me, so I mean, I don't see them like you guys do, but people have been telling me it's in there now.
I know that I used to meet with my clients when they're doing their escrow packets, and often we would be, I mean, we're easily halfway through the transaction or further. They could have been holding on to it for a week at that point. And we sometimes just start talking about insurance back then. And so it's just such a different mindset
Totally.
now than what it even was 2, 3 years ago.
I agree.
Definitely.
It just really has taken much more prevalent. So I really appreciate Joe you coming on to talk.
Of course.
What does it look like when you get a call from one of us? Like what in your day when you get a call and Tina says, "Hey, I'm looking for insurance," and she gives you the square footage of the home, all that. Is it you go to one place and you get one answer? You have to go to a different carrier, get another answer? Like what do you do as a broker?
Good question. So if you're reaching out to me, the first thing I'm gonna do is I'm gonna pull up on the map. Where is it in Beaumont, Banning, Calamasa, wherever the property's at. I'm gonna look at when it was built. If you have any idea when the roof was updated, what kind of plumbing is on site, what I think we can do. And then at that point, I'm going to say, are you just looking for a ballpark or you want more of a firm quote? Because a firm quote, I need information on the buyer that you may not be prepared to divulge at that moment in time. So, and then I'll give, hey, it could be 150 to 180 a month in that range. So I'll give a ballpark, and majority of the time it's right in there. So because we do business in this whole area, or someone will send me a text, "Hey Joe, what is this house looking like monthly or annually or whatever?" And then I'll shoot them like, "Hey, it's gonna be around this price." And then at least they're armed with that information, whether they're going into showings that day or they're narrowing it down between two properties, depending on how good or bad the insurance looks.
Fair.
So that's the majority of how our day looks. We get anywhere from 15 to 25 different text calls, emails of that sort per day. And that's majority of it is. And then if the customers or the buyers like, "Hey, we really want to get a firm number because we got to show the mortgage company," then majority of the time they'll say, "Hey, call Joe, call whoever you work with and trust," and then get a firm number. And then we can go from there. And then like, all right, hey, we want to move forward, and then we can issue the binder and go from there.
How long does that process usually take? Like, let's say you have a buyer who procrastinates and doesn't call the people they're going to call, and they're
Never
coming down to
happens.
the wire.
Never
How
happens.
much time do you need?
Realistically, the fair plan, if we have to go that route, has gotten a lot better as far as getting quotes out fairly quick. So usually the same day we can get it issued. Actually, let me backtrack. The fair plan, if we get a quote and they say, "Hey, we want to move forward," we can take the down payment for the fair plan and issue it for the next day. That's the quickest we can do it, because the fair plan can only be issued for the next day once we take the down payment. The reason I'm saying down payment, the full amount cannot be billed to escrow. So when I talk to the buyer, I'm going to say, "Hey, Jen, you have fair plan and we have DIC. The DIC 99% of the time can be billed to close of escrow. The fair plan cannot. We must take around an 18% down payment, and that gives us a 30-day window for the escrow check to get to the fair plan to pay the difference. So we'll be very transparent with them so they know, like, because that 18% could be a lot. If it's 2,000, it's $2,000. That's $360. And if they're already kind of skating in to close the transaction, that's still a lot of money.
Right.
And I understand that, but so we're going to be like just super transparent with them and say, "Hey, we need this down payment. We cannot issue a binder without the money." They've been saying for years they're going to allow escrow billing for the new business, and it still hasn't come to fruition.
And if it's not fair plan, what's the time frame for that to be able to go from them committing to you to issue a binder?
Same day.
Okay.
It's fast. As long as we get all the documents signed by the buyer quickly, which, as we both know, there's not two buyers are created the same. So as long as they e-sign it quickly and we get everything done and we get all the information from the lender as needed, as the mortgagee clause, the loan number, and that stuff, then we can get it same day. I don't recommend the last day, but we can do it the same day if we need to.
I kind of feel like we're peeking behind the curtain, don't you? Like there are questions that I've never asked.
Yes.
And never thought to. I was like, oh, okay, that's very cool.
Yeah. So that's majority of, but yeah, it can be done fast just for comfortability. Because there's every once in a while, we have one right now in Calamasa, they bought a quadplex and the fair plan had to review it. So it's taking like 4 business days and it's taking forever. So we're calling every day. So that's not by and large everybody, but it does happen where it gets triggered to get reviewed and then it stays there for multiple days. And then it's like, all right, we're waiting for the transaction. I know, I'm waiting just like you. We're kind of at their mercy.
Mm-hmm.
What I would recommend lastly, if you know the consumer is going to the California Fair Plan because that's majority of all they got, I'm going to ask them if they call me. Pick the broker they want to work with first, because if I submit a fair plan and Tina submits a fair plan quote, they're going to be the same if we copy the same amount of coverages. There's really there's no deviation in the price because it's governed across all the same. So if someone calls me and says, like a buyer, like today, we had someone call and say, I already have 4 different quotes. I'm going to say, hey, take one of those, because he already had the fair plan and he had another carrier I was going to go to and another. He's like, so you're not going to help me? I was like, well, you already have the same ones I'm going to provide to you. So there's no benefit to you. I mean, I want to be fair to you. You already have 4. A lot of people barely get 1, so to have 4 already in your hand and they were all good carriers, I was like, pick the one you out of there. That's going to be good.
Wow. Good advice.
So I want to be fair. So I don't want to, I want to waste your time if you're out there looking. It's like, it's tough. My premium went up, or the quotes are high. And it's like, well, they're higher than they were for sure.
Right.
Than a couple of years ago.
Awesome. Well, thank you so much for taking the time to be with us tonight. I know we've been talking about this for over a year, getting you to come on and talk. And it is such a thing that, our clients and other agents really need to know. So yeah, thank you for taking the time to be on In 3 Nerds We Trust and being our 3rd nerd.
Yeah, I'm so happy. Thank you.
Thank you. Really appreciate your time.
I don't know. Are we ending?
Well, there's the one I didn't do my mistake.
Oh, that's okay. We can.
But do we do that at the end, or did we do that at the beginning before?
I think we did it at the end. It's like a little closer.
Okay. Well,
we don't have to if you don't want to.
I can. That's fine.
Okay, cool.
So on In 3 Nerds We Trust, we do a little thing called mistakes that we've learned from, that hopefully you can learn from us and not have to learn for yourselves. So unfortunately, the mistake that I learned is I had sent a referral to an agent in another state, and I didn't send the paperwork right away. I didn't. It's true. That is 1,000% on me. The client was out there, they were looking, they stopped looking, and they took a little break. And then they contacted me and they started looking again. And I sent to the agent, hey, they're looking again, reach out. Still didn't send paperwork. That closed. It closed escrow. Agent never reached out to me to give me a heads up. But again, on me. Well, I find out months later that had closed, and his mother was actually buying a home also out that way. And so I texted the agent and I was like, hey, I know that one already closed, but she's looking now and I'd really like to do the paperwork for this. And she's like, oh yeah. Oh, I forgot. I'm sorry. Like, yeah, you didn't send the paperwork, but yeah, go ahead and send it for this one. We'll be okay for this one. Well, first she said, I'll send you a non-referral and blah, blah, blah. And I said, no, I really want to do it on paper for this one. Send the paper the next day. Never signed the referral, never got back to me. And from what I understand from my client, told my client, well, she sent this forever ago and then she didn't follow through. And I gave her a few options and she didn't do it. And so now she's just trying to get after me for money.
Wow.
So I filed an ethics complaint because 1,000% ethics is treating other agents the way that they deserve to be treated. And at the very least, the lack of response is not how you treat other people. Like I called, I texted, I emailed, called, I texted, emailed, and just no response at all. So you can have an ethics violation filed on you. So I'll have an update on that later, but I did that last week. And I knew I wasn't going to get the money. And then it's not even the money. It's just the fact that, like, be better. All agents, be better. You know, if somebody was referred to you by somebody else, be the bigger person and just reach out. Like, I'm not going to send any more referrals that way, am I?
Absolutely.
No, I'm not.
Oh my gosh.
And I guarantee you, I will be telling people in that state and out of that state who not to refer to.
Wow.
So,
definitely.
Learn from me.
That's
Womp womp.
terrible. I'm sorry.
Been bit like that before too, so I definitely feel your pain.
Right? It's just, I don't. And anybody that I brought it up to, they're like, she did what? And like, yeah. So, whatever. Learning experience in year number 24. Don't trust anyone.
Oh my gosh. That's terrible.
And if we laugh at it, that's all that matters.
Absolutely. Hopefully I didn't put a damper on your evening. I appreciate you letting me be on today. I really do. It's a difficult topic right now, so I appreciate you letting me share some insights.
Thank you so much, and thanks everybody for watching.
Bye.
Bye.
And that brings us to the end of another exciting episode of In 3 Nerds We Trust. Thank you for listening and hanging out with us today. If you have any questions or topic suggestions, reach out to us at in3nerdswetrust@gmail.com. We would love to hear from you, so don't hesitate to reach out. If you found some value in today's episode and want to stay connected, here are a few ways you can do that. Subscribe to In 3 Nerds We Trust on your favorite podcast platform so you never miss an episode. Leave us a rating and review on any of the platforms. Your feedback helps us improve and reach a wider audience. Share this episode with friends, family, or anyone who might enjoy the thoughts and insights we shared today. We'll have a new episode every other week, so please stay tuned for more interesting topics. Thanks again for your support, and follow us on Instagram and YouTube as well. Bye!